We're going to wind up this lesson, hopefully in this video, talking about the weighted average costing method and then some other challenges that utilizing the process costing can involve. So the weighted average, unlike the FIFO method, which assumes that the prior costs were in the prior period, beginning inventory costs and their output are all treated under the weighted average period method as though they were incurred in this period. Now, the calculations that you will see will look just like the ones that we did. So the physical flow inventory for equivalent units, whether you're using FIFO or weighted average, is going to look exactly the same. So you notice here that these numbers should look familiar. And this is the point at which these processes start to diverge, because you'll notice now here we have total units that we're accounting for now of 120,000. And so basically what we've done is we've lumped the beginning work in process inventory with the started and completed inventory, and we've ignored the fact that the beginning units were already 70% complete when we started the period. And I'm just going to jump to the next slide, which is, so if you can kind of burn this in your memory for a second, while I hop over and show you what it looked like under FIFO, and you can see the difference at this stage from between these two methods. We've got 105 and 91.5, and here we've got 120 and 102 in conversion costs at the same point using the different methods. So now we're going to look at our unit cost, and the math for this is the same as the math that we did before. We're now just dealing with different units. We've spent the same amount of money to get to this point. The question becomes, or not the question, the answer is that the weighted average and FIFO are going to allocate these costs differently because we're now dealing with different equivalent units. So again, still same total costs, but now we're looking at 22 cents for units completed of our at 90,000, and the split is 17 and 30 rather than I think it was 18, or I should say 17 and 5, and I think it was 18 and 5 for the cost to get us to our 25.5. All right, so here is our production report using the weighted average method, and you can skip back a couple of slides to just compare those if you're feeling real curious, but we've accounted for all of our direct materials and conversion costs in our report that we just did. We see that the direct materials equivalent under this method is 17 cents, conversion costs under this method 5 cents, getting us to total cost per unit of 22 under this method rather than 23. But because now we're dealing with a different number of units, it still gets us to the same point. So there are definitely advantages and disadvantages in terms of these different methods. Certainly it is easier because we're not having to, we can just deal with everything as though the costs were in this period. But is that really the I guess from a purist sense, the correct way to do it? Probably not. Another one of the challenges that comes with using the process costing is what happens when your unit of measurement changes as the unit you're producing changes in terms of physical form. In the example that we were working with earlier, we were converting it. It started out as ounces when we're looking at materials, but by the time it's at the end product, it's capsules. And so you're going to have to then also deal with the conversion as the physical form of your product changes throughout the production cycle. We're going to use the data from the Binastar Encapsulating department to, oops, I'm kind of cut off here. There's no good place for me. To illustrate this point. So I'm gonna, although I think probably inescapably, I think I'm going to have to jump back to these, but just try and kind of sear these numbers in your mind for a minute. So they had 24,000 unit in process at the beginning. They completed 375. They've got 45,000 at the end. Here are the associated costs for the stuff that was in the beginning inventory as well as the current costs during the period. So as I said, we got 24,000 units in beginning work in process inventory. What was transferred in during May had to be converted. It started out as ounces, but then had to get converted to capsules. And you can see here at the bottom of this little calculation, basically for every ounce of product, we can make 4.4 capsules. And so they multiplied the ounces times the 4.4 to get the equivalent units transferred in during the month of May. And then that gives us 420 total units to account for. We started and finished 351,000 units during the month of May. And if we add to that what we started, or what was already in our beginning inventory, I should say, that gets us 375,000 units that we completed, and then we had 45,000 in our ending inventory. So we have total units to account for of 420,000. Now, breaking this down by materials transferred in, direct materials added, and then conversion costs, you can see that for materials transferred in, 45,000 of the units were 100% complete. Direct materials were 100% complete, but only 30% in terms of conversion costs for that ending inventory. And now we need to start costing this out. So back to our units transferred in, and I'm gonna just I guess before I hop backwards, just remember we've got this denominator here for both of these next two calculations of $420,000. So I'm going to go back to our data to see where we get those numbers. So you'll see here, we've got transferred in costs for both current and work in process on May 1st. So 1,200, 19,800 gets us to 5 cents a unit. Now going back and looking at our materials costs again, and I said I wasn't going to do this, but here I go anyway, 450 and 37.50 for direct materials, which gets us to 1 cent. I won't jump back on the conversion costs because I think you get the picture at this point, but we add those together and divide those by the 388.5, and that gets us 2 cents a unit. So we've got a total unit cost of 8 cents a piece. Now, we know that we completed a total of 375,000 units between what was basically partially complete when the period started, plus what we started and finished. So if we take that 8 cents and multiply that times the 375,000 units, that gets us 30,000 for the cost of goods that were then transferred on to the next phase in the process. But then we also have to remember that we've got goods in ending inventory in our department, so we need to calculate the value of that as well. And so we've got our transferred in materials, direct materials added, and conversion costs, and we just use those multipliers, the same multipliers that we used to get to our 8 cents here. We will apply to those ending numbers here, and that gets us a total of $2,970 for our ending inventory. And so this is just the production report, and you will see how all of those have been taken into consideration here in terms of unit information and then cost information below. And you see we've got our 30,000 in units transferred out, and we've got our the value of our ending inventory, and we have total costs to account for of 32,970, which matches, lo and behold, up here at the top, which is really sort of the, I guess probably the midpoint, because this is the lower half of the production report, but of the 32,970 in terms of costs we needed to account for. The last thing we're going to talk about in this chapter, and I'm not going to spend a lot of time on it, is something called operation costing. Sometimes you have a manufacturer that's got processes that are very similar. They might be making identical products, but their raw materials could be vastly different. And as a result, you're going to have very different costs associated with that. So these may be produced in more of a batch form. And when we combine the concepts of the job costing with the process costing, we end up with this operation costing. Now your book gives an example, and it's I probably couldn't come up with a better one, so I'm just going to steal it, of women's skirts. Now for the most part, I mean, a skirt is kind of going to be a skirt. However, what you manufacture that skirt out of will differ widely in terms of what you can sell that for, and maybe to a smaller extent the processes that are involved in that. But whether you're using polyester or some, I don't know, imported, I don't know, silk something or other for this skirt, obviously much different. And so you're going to batch these together through your system. So you might have the silk and the wool and whatever going through as batches, but they will all get the same processes. But because of the difference in the materials cost, we can't just lump them all together. And so this slide, and you will want to kind of follow this in conjunction with the next one I'm going to show you, because this kind of follows the flow of having two different batches but very similar processes and how they kind of come together and end up in finished goods. So I'm going to jump forward and then I'll come back to this slide real quick, because we've got the journal entries, and following these perhaps through their journal entries may make this a little bit clearer. And so you see that our initial, and I gotta look beyond my camera here, so our initial materials, they go out of the materials inventory as F and A, and so one goes into work in process 1, one goes into work in process 2, and then there is a transfer through of that from the work in process 1 into work in process 2, and then some go to work in process 3, or some go directly to finished goods. So, oops, we'll go back, and this is kind of that same thing in pictures, but if you can pause these and go back and forth, and you can see in this flow chart here how the lettered transactions are associated on the journal entries, and kind of how those all come together in our batch A and batch B and all wind up in our finished goods inventory. So that's all I've got to say about that, and that concludes chapter 6.